What's up, YouTube? You know who it is, Pure Financial Independence here. So making today's video, I want to keep y'all updated with what I'm currently doing in the market. So I think it was maybe the last video or the one before that. I said that I sold out a Chewy stock basically because the balance sheet wasn't that good. They basically had just as much liabilities as assets and potentially going into a recession that none of us know how long it's going to last. Officially, we're not in a recession yet, but I feel like everybody watching this kind of knows that we're already in a recession. It's just not been recorded yet, which we'll find out in the next coming weeks after GDP comes out. So sold Chewy stock. I did sell it at, I lost money on it, and I'll take that just to be more safe in this market right now. Some of the stocks I did buy today with that money, along with obviously depositing more money in my account because valuations are super low. I bought Palantir, SoFi, a little bit of Planet, and then I bought, I think, 10 shares of Shopify. So Shopify was my biggest purchase, which I initially started a position, I think, 2 weeks ago. And then I think it hit like 319 or something today whenever I bought. I think it finished at like 316 or so. So I went ahead and bought some more of that. I bought, like 50 shares of Palantir, 75 of SoFi, just because those are companies that I believe in the long term are going to be game-changing companies. They're going to be winners. Right now, it's something that the stock market hates, Wall Street, and that's any unprofitable growth. I mean, basically every stock they hate right now besides oil stocks, which is eventually going to end. Everybody has their golden moments and stuff like that. Look at Robinhood, for instance. I want to say it was around $80 a share, and today it hit, I think it's 702 was the low or something like that, which is crazy because they have a little over $6 billion of cash on their balance sheet, which is what the whole entire market cap of the company is worth right now, which is insane. It kind of shows you what kind of market we're in right now, where a stock can trade at a market valuation at how much cash they have on hand. So if you were to buy out the company, you're essentially getting, one of the, I haven't researched that much into it, but I would say the most popular investing app for any kind of millennial, Gen Z, all the newer, age 30 and below traders and investors out here. So that's crazy that Robinhood, the fundamentals have gone garbage right now, declining revenue growth and stuff like that. They're losing money, but they have a lot of cash on hand. So, yeah, that would be an interesting play. If it got to a certain valuation to where you can hedge yourself on that, if you see them not losing that much money next year, you see the market coming back up, which is going to in turn get retail traders in there, which gives Robinhood more earnings, more revenue. So yeah, that's what I've done today. I bought a lot. I think I bought like $2,500 worth of stocks, which to some investors that are bigger, that may not seem like a lot, but somebody that has, under $100,000 in their investment account, $2,500, I think it was somewhere around there, 25, 26, something like that. That's a lot of money for somebody that's a smaller investor. And that kind of goes to show what I'm doing. So I'm buying, dollar cost averaging like all investors, I feel like should. It's because it's proven that it works, dollar cost averaging. But on real painful days like today, where you have the NASDAQ dropping like 4%, you have a lot of these growth stocks dropping like 10%. I feel like today was an amazing buying opportunity. As long, and this is one of the biggest things I want to hit right here, especially me, I have a safe job. I'm in the military. Don't have any kind of paperwork that looks negative towards me. So my job is guaranteed. As long as I don't, hurt somebody or do something really bad, I'm going to have a job. So that's why right now I'm basically putting everything I have into stocks without going into margin or anything like that, because we don't know how much lower the market's going to go if it does go lower. Nobody knows what's going to happen tomorrow or 6 months from now or a year from now. Over the long term, the market is going to recover. If you believe in the United States and our economy, the market's going to recover. So another thing I want to hit on with us going what I feel like is a recession, a lot of people feel like is a recession, not just Wall Street, people that are out here every day. If you think of gasoline prices or diesel prices, that's a tax on consumers. The normal average Joes like me and probably you watching this video. So all that money you're spending on gas, I just filled up my truck for like $110. Whereas, when COVID was really hitting off and stuff like that, I was filling up my truck for $45. So think of all that extra money where people ain't going out buying, expensive groceries, like the finer things in life, or taking vacations, or, any kind of thing like that, going and buying a new iPhone or subscription service. So I would like everybody that watches this video, obviously, to be investing, but at the same time, make sure you have an emergency fund. Especially if you don't have a super safe job, make sure you have some kind of, at least bare minimum, I would say 3 months of all your expenses. So your mortgage, your car payment, your insurance, your health insurance, your kids' expenses. Obviously, everybody needs food and water to survive. So that's what I would do if I have an emergency fund, but I would have my emergency fund super fat right now if me and my wife wasn't both in the military and having a super secure job. Same point I want to make here is don't spend money that if you go down 30% on that money, you are going to need that money within the next year. Because this market, NASDAQ's down, I think 31%. Nothing is stopping us from dropping. The markets are irrational. Nothing's stopping us from dropping 65% on the NASDAQ. And in turn, that would be about 50%, maybe even 55% down on the S&P. Even Dow would drop substantially more from where it's at now. So don't be spending money thinking that the stock market next month is going to start skyrocketing, because we have a lot of bad news. Think of all the foreclosures that might happen with interest rates rising, the housing market slow down. Think of all the jobs that slows down. Painters, plumbers, electricians, carpenters, people pouring cement, everything like that, all those jobs. And that's just in the real estate market alone, not to mention all these tech layoffs that are happening right now. Just be wary of your surroundings. Build up some kind of defensive strategy, an emergency fund. Don't be spending money in the stock market that you're going to need in the next year from now. All of these stocks, and one of the guys commented on my first video. Whenever I came back, I took like 5 months of a break. Really sit down and look at your stocks. I love Halion stock, and I think that's what kind of made my channel. I got, most of my subscribers off of Halion stock. And the reason why I'm not making videos right now is I never want to be that channel that's pushing a stock that I truly believe is going to lose a lot of people money. The last time I looked at it, it was below $4. There's nothing stopping that stock, just like any other stock, from dropping to $1 or $2, and people would get super scared, sell out, take a huge loss. Halion, I still truly believe in the company. I've been keeping up with them a little bit. They're constantly getting orders and stuff like that. But you also got to look, and they have a good balance sheet. That's what most SPAC mergers have. They have a lot of cash on hand for right now. But I'm looking out right now, and I don't really think our economy is going to be that good for the next 2 or 3 years. With our economy not being good, all these major carriers, I think you had Swift that just laid off like 650 truck drivers, even though supposedly we're supposed to be in a truck driver shortage right now. Companies are tightening down the hatches right now. And with that, you think these companies are going to try to be innovative right now and spend a little bit more money up front, developing trucks and stuff that are more efficient over the long term. I don't disagree with that at all. I still love Halion stock. But I don't see any major orders really hitting in the next 2 or 3 years. Right now, we're dealing with a lot of inflation. We're dealing with a lot of things in the economy. In the long term, I think we're going to, be better than ever in the next 5-6 years. But we still got some pain to go through. So I just wanted to make that comment. Hopefully that kind of gave you some kind of input of why I sold out of Hyliion. All of my core positions right now, though, I'm still holding. They all have really good balance sheets. Take Palantir, for instance. They've been, Alex Karp went out there and said that they're expected to grow 30% revenue growth year over year. Yeah, they may not hit that number. I think government contracts are going to be good right now, but a lot of these commercial sectors are not going to be the best place right now. So they're not going to be trying to spend a whole bunch of money on, artificial intelligence, stuff like that. So, but they have a really good balance sheet. They're cash flow positive right now. So that's a lot of the stocks right now. I'm still in the growth stocks right now. If you believe in innovation, which I don't want to hate on dividend stocks or anything like that, because a lot of those are holding up really well right now. But I'm younger right now. I'm willing to take more risk in solid companies, like SoFi, for instance. Anthony Noto's an amazing CEO. A lot of growth going for him in the future. Bank Charter finally starting to hit on their actual numbers when they report this next quarterly earnings. So that's why I wanted to make this video. Just tighten down your hatches. That's what I would say right now, and what I'm seeing in the real world right now. Being a normal average Joe, like a lot of people watching this video, is tighten down your hatches. Make sure you have an emergency fund. Make sure you're not investing money right now that you need, I would say, honestly, in the next 2 years, because you never know how long a recession could last, potential wars that could kick off, or any kind of thing like that. Housing, I would say we're going to be in somewhat of a housing crisis here in the next 6 months or so, with inflation rates rising as fast as they are. Look at the Federal Reserve. I think they're going to do a 0.75 or 75 basis point hike this coming up meeting. So that's going to kill interest rates. We're going to be looking at quick math. It's not going to be an exact number, but around 6.5% interest rates for a mortgage, which if you look at the past few years, that's pretty high. If you go back to the 1980s and stuff like that, it's not high at all. But from what all of us younger people, age 30, 35 and below, that's super high, what we're seeing. I got this house at 4%. Should have refinanced, but I was deployed at the time, didn't really get a chance to go. It's kind of excuses, everything you can do online nowadays, but didn't really have a chance to do that. But this video is long enough. We're basically 13 minutes right now. I just wanted to keep y'all updated what I'm doing right now, and what I believe, if I had a family member, what I would suggest to them is tighten down the hatches, have an emergency fund, and don't be investing money right now that you need for the next 2 years. Have a long-term growth or, bullish aspect over the economy if you're investing right now. And with that, I hope all y'all have a great day. Hopefully y'all bought some stocks today, some awesome discounts, a lot of stocks down 8 to 12% out there. So hopefully y'all have a great day. Catch me back on the next video.